Okay, let's just work on a few exercise problems for this chapter at the end. So some of them I think we went over already. Just choose some of the ones that you all didn't answer immediately last time. So making short-term decisions, which ones seem pretty critical here? Variable cost and fixed costs, we definitely need to separate them. So remember, for outsourcing, for dropping a product, those will make a difference. So having a contribution margin is not enough. We also need to analyze whether there is avoidable fixed cost or unavoidable part. But definitely we need to separate them first. Okay, now when making outsourcing decisions, which one seems important here? What is relevant? Well, B. Seems like a majority agrees on B, right? Variable cost of producing the product in-house is relevant. That's relevant. So what's the problem with A? It's relevant, free capacity. It's usable for sometimes for other products. Avoidable fixed costs are irrelevant. You also consider avoidable fixed costs. Remember the example we went over with the 50,000 and 40,000. So we avoided 10,000 fixed costs, so that's also important. What about D? What's wrong with D? Well, D, the part that may seem a little, was seen with error is the unit cost part. Okay, incremental cost, remember for all of these we're looking at incremental cost, incremental revenue, and we're comparing whether incremental cost is more or less than incremental revenue. But total manufacturing unit cost, in terms of making outsourcing decisions, the unit cost wouldn't really matter that much. Well, the total production cost does, and we want to compare that against the incremental cost, which is the outsourcing cost, and the free capacity if we can get any profit out of it. Most importantly, what the decision rule that links to the outsourcing decision is the weighing those two differences rather than understanding the total manufacturing cost and each unit cost. Okay, so incremental costs is important, and it's important to compare themselves. Okay, deciding which product lines to emphasize, what is the decision rule here? What to emphasize? A is good, but not good enough. Contribution margin per unit of product is important, which one is high, but it's also important, remember, for each and every hour, how many products we're actually able to produce to provide customers. So we need to figure out, again, that DVD example, regulars and special ones, which one we can produce more in quantity, and then we time the unit contribution margin. Remember that example with 100 regular discs, 10 special discs, each of them getting 90 cents, 10 cents, but overall you're getting $10 here and $9 for the other. So you want to get the one with the highest contribution margin per unit, assuming this is every single hour's production. Okay? So this would be B. Same also works for labor hours. This is just one example, machine hours. Like labor hours, machine hours, you want to know for all the working hours how much you're able to actually get out of them, assuming all of them will be sold out to customer. Okay. Okay, for price setters, companies, their products and services, price setters. be unique, has special features. Remember, they have more control on setting the product's price, so it's technology-driven products, jewelries, art businesses. So more unique, has more cutting advantage over their competitors. Okay, now whether or not to drop an electronic product line, kitchenware.com would consider what? All of the above. So I think we went over this question, right? Cost it would save by dropping. Revenue it will lose if they drop the products. So remember, compare cost saving against revenues. And how dropping a product would affect other sales products. This sometimes they also need to consider, especially for departmental stores when you're offering a lot different types of products in your store. You may want to consider whether customers would not want to come because of this specific decision. Okay, decide whether to sell as is, process further. What do you need to ignore? Not consider, nor ignore. A, B. The cost of processing further, B, is definitely something we need to consider. Remember the gasoline example, $7,500, the cost, any machines, techniques you're purchasing and to help you process. So this one would be A, because whatever the cost you used thus far, remember that's sunk cost. It's not really relevant to this decision. Revenue you're getting from selling it as it is right now, you need that to compare it against revenue that you're getting after processing further. And so whichever one is higher, and also the difference is, does it cover the cost of processing further? Does it cover the cost of purchasing more machine, hiring more people? That's important. So if it doesn't cover it, then we still sell it as it is right now. If it does, it's an option. You can move forward, process it further.